You're watching RedChip TV, your source for small cap news.
Welcome back to San Francisco. My name is Brad Klein, Vice President of RedChip Companies, and you're watching RedChip Small Cap TV. I'm pleased to introduce to you a company, INXI Incorporated, that's traded over the NASDAQ. The symbol on INXI Incorporated is INXI, and we're visiting with the CEO, Jim Long. Jim, welcome to RedChip Small Cap TV.
Thanks, Brad.
Tell us about INXI.
We're a solutions provider, about $250 million in revenue, 400 employees or so, offices around the United States, started in Texas. We provide technology infrastructure solutions for larger enterprise organizations, primarily in three areas: network infrastructure, unified communications, and data center technology. Started in 1983, grown rapidly, 40-some-odd% per year over the last 4 years, posted growth last year in a very difficult environment, also in fourth quarter. And we believe we're going to be able to continue growing, gaining market share.
I think that's worth repeating. Give me that growth rate again.
44% over the last I believe that was 5-year growth rates.
Okay.
25% last year, 12.5% in the fourth quarter, and that's in a period where I think the overall industry is posting negative growth.
Yeah, tell us about. I mean, that's fantastic growth rate. How are you doing that in this market with your marketing approach?
I think we're better than the competition.
Okay.
We have great people. We're super focused in the areas of technology that we're involved in, which makes us better, I think, than the competition. We also have a very strong balance sheet, cash, no debt. We're able to take market share in a difficult market environment where some of our competitors, smaller competitors that have leveraged balance sheets, have had a really difficult time in the past year. So
sure.
That maybe explains it in the past year, but even if you back up before then, 40-some-odd% growth certainly is much higher growth rates than the overall industry, and it's because we're gaining market share.
Well, give us an idea of what the products do. You've got some unique products out there.
Sure. Now, we don't make a product. We take other people's technology, mainly Cisco, NetApp storage products, VMware virtualization software in the data center, a variety of network security products, unified communications products that are complementary to Cisco's IP telephony product, Cisco's video conferencing system, which is called Telepresence.
Right.
And we design, create the architecture for the customer, then implement the technology, and then support it after the sale. So what's unique about us is we are very focused on the leading products that we believe are the best-in-class products in the space that we're involved in. So the fact that we are selling the leading products, we believe helps us be able to grow and gain market share, and the fact that we're better at implementing and supporting those products and solutions, I believe, is a factor.
Right. This CEO, Jim Long of INXI Incorporated, that's traded over the NASDAQ. The symbol on that is INXI. And Jim, let's talk about the size of this potential market. How big is this market you're going after?
Sure. If you break it into the three major categories, we did about $200 million roughly in revenues in network infrastructure last year. That's about roughly a $67 billion market worldwide, according to IDC. So that gave us roughly about 30 basis points of the entire worldwide market. Right. So a lot of room to grow. Now, we're not worldwide. We're in 16 markets in the United States. So, and we still have a lot of growth just to do in the United States, but certainly that's a very large market. In the unified communication space, including video conferencing is a small part, and then the IP telephony portion, according to IDC, is about $10 billion. We had 40 basis points of that business worldwide last year. In the data center business, which is newer for us, including storage, network infrastructure within the data center, and servers, is about $67 billion. It's the largest, and we're only 2 basis points of that business because it's so new for us. And that business, by the way, grew over 140% for us last year.
Wow.
So
Okay.
it's because it's newer. We only entered that space 2 years ago, so that's another factor in our growth.
So a lot of upside potential here. And then just a quick snapshot on your background and your team.
Sure. I started the business in 1983, so I was 24 years old, so I've been running this business for about 27 years now. Right. We really reinvented the company in 2000, went public in 97, but sort of at the top of the tech bubble and dot-com bubble, we saw an opportunity to reinvent the company, so we sold off the majority of assets for cash, took that cash, and created the kind of company we have today. Our president, chief operating officer, has been a CEO of a publicly traded company, larger than we are today. Mark Hills and Brian Fontana, our CFO, has been CFO of 4 other larger public companies. He's been with us for 4.5 years now. Mark Hills, our president, with us for 8 years since we reinvented the company back in 2000. So very strong management team relative to the size of the company, and we've been working together for quite some time.
Yes, again, Jim Long of INXI Incorporated, he's the CEO. The symbol on that is INXI. And Jim, you got a debt-free, high-growth company here. Things are looking well. Talk to us a little bit about the future. Be a little general for us, and why people should consider the stock right now.
Oh, sure. If you look at it, I'll talk about 2 things: the future, and then maybe why somebody should consider the stock. First of all, if you're a value investor as opposed to a momentum investor, our stock has moved from $15 or so at the height of the market in the fall of 2007, October, to in the low 2s today. So it's just been crushed. At that level, in the low 2s, I believe the market cap is roughly less than $20 million with $11 million in cash, so our enterprise value is maybe $8 million. So why would that have occurred? We had some big charges in the fourth quarter. We had to write down goodwill and intangibles because of accounting rules. It's related to market cap. Stock price goes down, you need to write down intangibles. There's also slower growth, and we were not profitable in the fourth quarter. First time in quite some time we were not profitable. There were a number of unusual charges. So the stock's low, and you can find some reasons why that is the case. Going forward, however, we still think we're going to be a high-growth company over a 3 to 5 to 10 year period. There's a great opportunity to continue gaining market share. All we have to do is keep doing what we've been doing. Continue to gain market share against our competitors, and we will grow even if the overall market is not growing. So if you like low-price stocks with companies that have great balance sheets and have consistently made money, except for one quarter, maybe. I don't want to tell anyone in this market what to do in terms of investment, but I think that's what differentiates us from maybe some other investors.
But I think our listeners should go look it over again. This is Jim Long. He's the CEO of INXI Incorporated. That symbol once again is INXI. That's over the NASDAQ. And Jim, thanks for joining us on RedChip Small Cap TV.
Thanks, Brian.
This report is not a recommendation or solicitation to purchase or sell any security, nor does it constitute investment advice. Visit RedChip.com for full financial disclosures on RedChip clients.